This stock market crash due to Trump's radical tariff policy has already brought down the S&P 500 by 20%. But what I want to talk about today is the extreme importance of learning how to hang on to your investing gains over the years. You don't want to be that investor that does fine in bull markets when everything is going up, and then as soon as there's trouble and the market crashes, you give all those gains back. As an example, this here is a 5-year chart of the QLD ETF, which tracks with 2 times leverage the NASDAQ index. Now it's down about 45% because it does use leverage. But the thing I want you to notice is the price it's at right now in April 2025 takes it all the way back to the same price it was at in April 2021. We're talking about 4 years of gains wiped out. And it's not just leveraged stocks either. This chart here is the Vanguard VBinks, which is a 60% stocks, 40% bonds balanced index fund. This is literally what the vast majority of the investment world is tracking, more or less. And it's lower today than it was 4 years ago. For buy and hold investors, they have mostly spun their wheels and not made any forward progress in the last 4 years. Up during good periods and then right back to the beginning during a bad period. And let's be honest, things could get significantly worse from here. I don't know if we'll go up or down, but if recession is in our future, then look out below. The point is, there is a way to invest where you can participate in bull markets but not lose all your progress in bear markets. I call this tactical investing through volatility targeting. I'll give you an example of exactly how it works using our defensive rotation strategy, which does actually use that QLD ETF I showed before. But unlike the benchmark, I'm not back to where I was 4 years ago like the underlying QLD or the Vanguard VBinks. For me, I'm still up about 90% in that same time period. How it works is I'm mining volatility metrics and dividing the market up into different risk ranges. Our aggressive positions during stable markets, which we hold on about 60% of trading days, will be allocated to the QLD, the 2 times NASDAQ. But when volatility elevates and risk is rising, we move into our safety position of XLU utilities, which does perform significantly better than stocks do during higher volatility. And then in extreme ranges, about 10% of the time, we just move entirely to cash and watch the carnage from the sidelines. And then there's also an extreme low volatility range where we hold bonds, because at that point the stock market is probably running on fumes and looking for a short-term pullback, so we do move to safety down there. But that strategy that has made about 30% a year does represent my style of volatility targeting. Now, we don't always get it right, of course. 2022 was a strange year. Pretty much every asset class, including ones that are traditionally considered safety, they all went down just as much as stocks did, so I can forgive my strategy a little bit for having its only losing year. But the point is, we don't have to give back all of our gains every few years when the market crashes, because eventually there's going to be a huge crash and then it's really going to matter. That's the whole point of tactical investing. Participate in most of the good periods, yes, but also protect your capital during bad periods. Again, a live trading example shown here. This is the same defensive rotation strategy, but now just for the last 6 weeks since Trump started to break the market. You can see there were a couple days there where we tried to get back into the market, which failed, but overall down 9% is a whole lot better than being down 38% with the buy and hold. And we also have a strategy that's quite similar, but this one is short and long volatility with gold as the safety position. Here's the live trading results for our tactical volatility strategy. Again, since we moved to safety on February 24th, 6 weeks ago. In this case, it's actually up by about 1% compared to the buy and hold of the underlying SVXY being down 33%. The point is, if you start getting a few of these plus minus situations moving in your favor, doing well during good periods and avoiding most of the drawdowns during bad periods, you rinse repeat that over a few decades and you're definitely going to crush the market. So if you're ready for me to show you exactly how to do this, then definitely claim your free trial to VTS either in the description below or on my website. Let me show you why I personally have slept like a baby the last few weeks. So now you can either go to the next level of education and learn how those volatility ETFs actually function based on the VIX futures, or you can check out this video where I explain how I personally use the volatility products to make over 30% a year with tactical rotation. See you in the next video.